Street still digesting everything that we got out of the House Financial Services hearing yesterday, the degree to which we learned anything new. But there were some interesting exchanges, especially with Vlad Tenev of Robinhood. Listen to this.
At that exact moment, did you have the liquidity for $3 billion? 5:11 a.m.
At that moment, we would not have been able to post the $3 billion in collateral.
Leslie, I've been dying to know what lessons you drew from any of the Q&A.
Yeah, I think that exchange right there was the most revealing because we have seen a little bit of this back and forth from Tenev over the past few weeks about what his company was really going through during January 28th that led them to the decision to restrict trading in certain securities. So was there a liquidity problem? Was there not a liquidity problem? He kind of has gone back and forth over what exactly was going on. Of course, they were ultimately able to raise $3.4 billion in venture capital. They were able to restrict buying of certain securities, which limited their volatility profile, requiring them to post less collateral to their clearinghouses. But he admitted in that exchange right there that, yes, at that point in time, we had a big problem. And what's important about that is not just that it's a Robinhood story and you know, this will go away as some kind of blip, but it exposes potential vulnerabilities in the system. It exposes potential risks in the system. You know, I remember that morning I was talking to hedge fund managers across the street, and they were saying, you know, if Robinhood has a liquidity problem, that's a big issue for the broader market as well. So this is something that would affect everybody. And I'm really looking forward to speaking with Representative Gonzalez next hour about this very exchange and, you know, what it means to him and the rest of the lawmakers with regard to, you know, potential regulation needed. You know, because unlike FDIC insured deposits, these are not, they don't have the same kind of protection right now. So if Robinhood were liquidated, that would be a big problem for its 13 million customers, David.
Yeah, I don't think they fully understood the risks inherent in their business, I think, Leslie. And, you know, the first lesson, of course, when you have a liquidity problem is never admit you have a liquidity problem.
Right.
That's 1, 2, and 3 in the list. Don't ever admit it, because when you do, then you do. Then you got an even bigger problem. And so you could expect that Mr. Tenev would have, you know, danced whatever dance he needed to avoid that question at the time in question. But there's no doubt they did.
Right.
There's no doubt they did. They had not anticipated, of course, as few could have, what went on during the course of those few days. And they clearly needed a lot of money, and they needed it fast. Thankfully, they were able to get it.
Yeah. He called it a 1 in 1.35 million event. So a 5 Sigma event, something that was rare, unexpected. I don't know, David. I don't know how statistically rare something like this is, how likely it is to happen again. You know, nothing has structurally changed that could prevent, you know, a group of traders from causing volatility in some illiquid names.
I know. Listen, I feel like I've had a fairly long career at this point, Carl, but I feel like I've lived through a lot of those 1 in 1.5 million events. I mean, long-term capital, those geniuses, remember them with all their Nobel Prizes? That also was like, well, whatever, yes. I don't know how to express it, but never could happen. And, of course, it did. I mean, we can go down the list. These things happen a lot more often than you think, given the odds.
Shepard Smith here. Thanks for watching CNBC on YouTube.